But at the moment, what we're seeing is that, while despite of all the talks of inflationary concerns, we're not really seeing that, at least here in China or in Hong Kong for that matter. In particular, when we look at the CPI, in China is still roughly around 1.5%. Pork prices have not gone up significantly. We are seeing producer price index, sort of rising significantly over the past couple of months. But again, that's due to more of a low base effect. During the second half of the year, we feel that low base effect actually gradually fading out. We're expecting PPI in China to actually start to gradually slow down a bit as well. So we're not too overly concerned on that. And given the fact that especially within the Asia sort of region as a whole, interest rates are still not necessarily at such low levels as other developed markets. So we're not too overly concerned of what's happening, at least in this part of the world.
Okay, so how big a risk for Asia is tapering in the US? If the Fed comes out in the upcoming policy meet and says we are looking at tapering down the road and then finally announces the timeline, let's say during Jackson Hole, what happens to the markets in Asia?
Well, initially there's going to be definitely shocks, right? Because the fact is that you would expect for investors to potentially be much more careful as to some of the investments that they have in this part of the world. But if we take a step back and we look at sort of more medium to longer term perspective, with the fact that you might start to see some of the investors in the U.S. maybe pull back some of their investments there, maybe at a standpoint, do they reallocate? Because the fact is that when you look at this part of the world, we have been seeing quite a bit of capital outflows already for some time, amongst larger investors because the fact that you had such a strong U.S. dollar for such a long period of time. So we think all in all, investors will look at the fact that growth here is very strong from an economic perspective. Earnings growth is also very strong here in Asia over the next couple of years in terms of what we're seeing. We think that actually that leads to a lot of opportunities for investors when they're trying to reallocate their assets.
Ken, where specifically in Asia do you think the best opportunities lie?
Well, in particular, A-shares, China A-shares, we see a lot of opportunity still, given the fact that year to date, it's actually been one of the underperformers. In particular, since January, A-share markets have corrected a bit, while we saw very strong 2019 as well as 2020 gains on the A-share side. And also in particular, also in the Philippines, the fact is that, Philippines have actually underperformed on a year-to-date basis. But with that said, we are seeing the fact that overall remittance levels are coming back up as global economies are gradually opening again. We're expecting to see a lot more, vaccinated people within the Philippines over the next 3 to 6 months, and that could lead to potentially, sort of investors looking back into that market again. So right now, China A shares as well as Philippines are some of the markets that we're looking at more closely.